Hey guys, welcome to Make Money Count. Today I am in the studio alone because Marcus is attending this podcast from a different location, a super secret location.
It's not that secret.
Right, that's true. He's in Greece. He's in Greece. But he can tell you all about that. But first I'm going to tell you that I wore this shirt particularly because I didn't think that Marcus would be here and he hates this shirt. You don't like this shirt, right?
Listen, looking at it right now, for sure I don't like it. But I've told you that I don't like it?
Yeah, you said that.
Sorry.
That's okay. It's anarchy here now. So now that you're not in the studio with us. But we're happy. We're doing a podcast. We're still doing it. We don't want to give up on you guys. If you're watching us on YouTube, wherever you're watching us, make sure to hit like, make sure to hit subscribe, leave us a comment, let us know what you want to hear in our next episode. And we can address your topics. We can talk about whatever you want within reason. All right, before we get into it, I have some interesting stuff that I've looked up, found out, researched, but Marcus is going to give us a little bit of an update on the market right now.
Oh, great. And you know what? I brought my pen with me.
I was just going to ask that. That's so funny.
So, listen, what we're seeing is the Government of Canada 5-year bond yield has continued to drop. It's up a little bit today, but we're at 3.3% on the Government of Canada 5-year. And that's huge news for longer term fixed borrowing costs. If you remember, we always talk about the spread that lenders want to see between the Government of Canada 5-year yield and 5-year fixed rate mortgage rates, but 150 basis points. It can move a little bit from 120 to 180, but with a 3.35-year yield, you're looking at 4.8% 5-year fixed rates on average for the market. Now, again, like a premium and a discount kind of gets priced in there depending on risk in the market and what the banks want to see. But that's good news for borrowers. And that's not to say that we're trying to guide borrowers into 5-year fixed rate mortgages, because I definitely think variable is going to be the way to go. I think that in order to kind of contemplate the relationship between a variable rate and a fixed rate, you have to contemplate the relationship between the strength of the Canadian economy and rate cuts, because it really is, and we've spoken about this at length, it's a game of chicken, right? It's the Bank of Canada is very fearful to drop interest rates and spurn inflation, and let me just repeat that. The Bank of Canada is very reluctant to start dropping rates too aggressively and incite inflation again, because it's going to be very difficult to attack again with monetary policy. But they're doing that with a clear mind towards how much this is damaging the Canadian consumer. And I know that you have a few points as to how damaged that Canadian consumer is. So I'll let you discuss that in a second. But it's really right now, the pain that the Canadian consumer is feeling is going to continue until we see more significant rate drops from the Bank of Canada. The other part of this that we were worried about was that the American consumer and the American economy seem to be doing so well. But I think that as we start seeing more retail reports coming out of the United States, we're seeing a picture being painted of a weaker American consumer and a weaker American economy. It's so easy to detach Wall Street and Main Street in the United States, right? Like, unfortunately, what we look to for our kind of psychological indicators as to how well the American economy is doing is we look at the S&P. But when such a huge component of the S&P is, 6 or 7 companies, it can distort the strength in the American economy, or the perceived strength in the American economy. So Bank of Canada is worried about two things, right? They're worried about inciting inflation, and they're worried about decreasing interest rates, not only because of inflation, but also because of this divergence from the United States. So if we see kind of continued weak numbers coming out of the United States, coupled with weak numbers here in Canada, it will provide them with further motivation to decrease interest rates faster. Again, I'm still uncertain as to whether or not we're going to see a July rate cut. I hope we see a July rate cut, but if we don't, I hope we see 50 basis points in September. So again, it's like a game of chicken, right? We can see it every day with our borrowers. More and more borrowers are looking to do something now, but that doesn't mean more purchasers have come into the market. Doesn't mean that the real estate market is stabilizing. Still a ton of supply and very few buyers out there, especially with interest rates still where they are right now.
Yeah, it sounds like a lot of people who are trying to sell their homes right now are really running into a problem.
Yeah,
trying to find
like
you know
there's
what I
no
mean?
buyers, right? There's no, if you have to sell something right now, the market is not your friend, right? Like this is very much. I know that like they monitor whether it's a buyer or a seller's market based on months of inventory, and it indicates that it's very kind of slightly skewed to the buyer, but it's like nothing we've certainly seen in the 25 years that we've been doing this.
Yeah. It's sad. I feel bad for people who are trying to sell their properties. And now's the time when people need to sell their properties, right?
Yeah.
Like you said, they've been sitting on the sidelines trying to wait for something to happen. And, people need to do something. So, I mean, if we have too much inventory. Well, listen, I do have some facts, some interesting facts that we can talk about. Again, kind of speaking to the weakness of the economy or what's happening in the mortgage market. But I'll just go through some of these facts. We can chat about it. So the first one that I found interesting was in the first quarter of 2024, 34,000 Canadians missed a mortgage payment.
Wow.
Which is a lot. What would that be percentage-wise from the Canadian population?
What are we, like 40 million?
I'm still working off my grade 5 numbers
Well,
when
remember,
I learned what the population
we're letting
was.
in a lot of people every year now, right?
Right.
So is that 0.01%?
It doesn't seem like a lot.
It's a lot. I mean, I think that we should look at the historical percentage, but that does seem like a lot. I mean, just the quantum of people, never mind. It's a lot of people.
Yeah, no, definitely. And further than that, 1.26 million people, which is a huge chunk of the economy, defaulted on some sort of credit payment. So 34,000 for their mortgage and 1.26 million Canadians defaulted on some sort of credit payment, which these things are going to make it so much harder for Canadians to get mortgages in the future, right? As soon as you're missing mortgage payments, you have a serious issue that needs to be addressed before, perhaps even your existing lender would renew you, right? Which for a lot of these people is going to be a pretty big concern. Partnering yourself with a good broker is the best way to kind of figure out, navigate yourself back to that. Because at this point, once you're missing credit payments, I mean, your bank's not your friend anymore, right? They're just going to heap on more unsecured debt.
It's so funny, right? Like all this is going to do is further entrench borrowers with their banks, right? It's just going to solidify that relationship more. It's going to reduce competition. It's going to force them to continue to deal with the same lender because they're going to be unable to shop their mortgage around to someone else, to another lender. And I wish we could see some of the kind of goodwill that we saw from the banks that was, I guess, mandated by the government, but that we saw kind of during COVID. And we are seeing it to some extent, right? Like you're seeing the banks extend amortizations for people. But these missed payments, perhaps there can be some form of payment forgiveness for people. I'm sure that some of the banks are contemplating this right now, but is it really beneficial for the Canadian banks to see the consumer not have their credit report damaged? I don't know, right? If you're the bank and a percentage of your borrowers have issues with late payments on their mortgages and you report those late payments to Equifax, those borrowers will have a very hard time shopping your mortgage to another A lender, right? It just won't happen. So then that solidifies that bank to be able to continue to provide mortgage financing to that lender well into the future. And that means that the sensitivity to rate, sorry to cut you off, but just there's not going to be the same, you see it all the time, right? Customer gets a renewal rate sent to them from their bank and it says, the rate we're offering you on your renewal is 6.5. And the customer calls in and they negotiate a little bit and the 6.5 automatically turns into a 4.5. Well, if you have a late payment on your mortgage, your bank will understand that you have fewer options and they're not going to be discounting those posted rates you get in the mail for your renewal. So it's going to result, those late payments registered on people's credit reports will result in higher net interest margin profitability for the Canadian banks.
Yeah. And just like you were saying, the banks are going to know that you can't move your mortgage. And it's going to be very clear when you get your renewal rates. I was going to say. So, and it brings up and it increases their our favorite term is net interest margins.
NIMS. I mean, it's not just our favorite term. It's the Canadian bank's favorite term.
Yeah, it is the Canadian bank's favorite term.
When you think about those profitability numbers that we're getting from the Canadian banks and what component, what position, like what percentage of the profitability of the Canadian banks is net interest margins, you see how their businesses are built, right? At a time like this where there's very few deals going on in the M&A space, their bankers aren't making the same contribution to the profitability of those banks. The banks really rest on net interest margins. The difference between what they pay for the deposits you give them and what they receive from the liabilities that they give you.
Right. Well, I mean, the other fact that I have here, going on that missed mortgage payment, like the delinquent mortgage payments, there's also $1 billion in mortgages that are in severe delinquency. So 90 days or more without making a payment. 90 days or more. $1 billion. That's a lot of money.
Listen, the numbers do sound big, but I think that like on a percentage basis, we're pretty close to normal.
Right. So you think that a similar amount of people are missing their mortgages now than they would have before COVID?
I mean, I think it's slightly elevated. It would be good to get a chart. Maybe next week we can get a chart from Axelan. But I think what you're looking at is we're definitely heading into a period of, I mean, I want to call it a recession because it really feels like a recession. But the economy is really, really slowing to a crawl right now. And anytime that you see unemployment rates start to increase, and not even just like the unemployment rate doesn't look so bad, but when you take into account all of the new people we're entering into our economic system, into our country, looking for work, when the unemployment number ticks up in the face of that, it's worse. So the number of jobs available for the number of people decreases considerably, and that's really bad for our economy. Productivity is slow, employment is slow, consumer spending is down. All of those things are going to result in people having a harder time paying for their mortgage.
Yeah, paying their mortgages and paying their other debt, which also another fact, $21,276 is the average person's non-mortgage debt, but that seems low to me. Like that seems low. From what I'm seeing and from the people that are in trouble, that does seem low.
It's an average, buddy.
Right. I'm just saying, I think the average should be higher right now.
No, I mean, I think a lot of people have zero, right? Like, remember we were looking at that Bank of Canada report and it showed the amount of debt or the amount of savings different types of Canadians had, and it divided them up into Canadians with no mortgage, Canadians with a mortgage, and Canadians who were renting. And it showed you that Canadians who were renting had the least amount of savings on a kind of months to go basis. And the people with no mortgage obviously had the greatest amount in savings, the greatest number of months of reserve available to them. I think that if you were to look at those same numbers from a perspective of those Canadians who are renting right now, it would show a much different picture in the amount of debt that they're carrying.
Right.
Listen, debt's a problem always, right? Debt becomes a bigger problem when interest rates are higher, and debt becomes a much bigger problem when interest rates are higher for a longer period of time. And I think that like at this point, most of the fat, like the greedflation has been taken out of the market, right? Like I think you'll start now seeing quarterly reports from companies like Loblaws where maybe the profitability isn't increasing double digits year over year. And I think that that's because even those kind of greedier corporate monsters are realizing that they've killed the consumer. Right. And this goes for everybody, right? Like this should ring true for banks. It should ring true for shipping companies. It should ring true for groceries. All of these kind of oligopolistic concerns that we have and we allow to continue to operate in our country, their combined efforts have contributed to a great deal of pain for the average Canadian consumer. And at this point now, everybody realizes it. And it's time for interest rates to come off. It's time for prices to normalize. And if that doesn't happen, then they'll obliterate the very economy they hope to thrive in.
Right.
It's like that killing the golden goose.
Right. I don't know the story.
I don't know either.
I never heard that.
The goose laid golden eggs and then the guy killed it because he was a greedy idiot. I honestly don't know the story.
He does seem like a greedy idiot. Whoever killed that goose. Well, I mean, listen, I think on that, I don't have any more facts for today.
I think we got some good stuff out of this.
I'm very excited to have you back in the studio. I don't know when you're coming back, but it doesn't feel the same without you here. So I'm excited about that. But if you're watching, like we always say, make sure to hit like, make sure to hit subscribe, leave us a comment so we know what to talk about. And until next time, make money count.
All right. Bye, buddy.
Okay, bye.